All right, guys, back to work. I think a fantastic job today. Hope you guys made some money out there. Boy, these markets have been pretty wild the past couple days. Had some big news yesterday, today, tomorrow we got more big news. Now, I realize these wild markets might be a bit difficult to handle right now, but I'll tell you, once you see these charts right now, the charts are very straightforward right now. And I'm going to give you guys an easy roadmap to make some money on FOMC Wednesday tomorrow morning. But now, before we jump in and dive in my favorite trades, which should be a fantastic day again tomorrow, make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe. And if you enjoy these videos, if you like these lessons, hit that like button, will you? And give me a shout out, give me a heck yeah in the comment section below. Thank you guys so much for tuning in, supporting our channel. It has been a wild session. Where are the best trades setting up for what should be a fantastic FOMC Wednesday? Charts are all ready to go. As you can see, Nasdaq triple Qs are all ready. The E-mini and the SPY is ready. I have two very simple clues here on these charts in front of us that are telling us where the winning trades are probably waiting for us tomorrow morning. One of those clues is right here on these hourly time frames, these 60-minute charts. I think it's pretty easy to see, right? We're bearish overall right now on the S&P and SPY, bearish overall on the Nasdaq and the triple Qs. Remember, I like to use these hourly time frames to give us the overall directional bias. It tells us where the odds are stacked in our favor for tomorrow. The one thing the hourly chart doesn't do, though, it doesn't help us time the entry. It's great for big direction focus, but it's not good for entry timing. I have one more important clue on some much faster time frames, some tick charts, that will kind of help bring this all together and help us time the best entries for tomorrow morning ahead of FOMC in the afternoon. Now, before we dive in and talk about those tick charts and entries for tomorrow, let's talk about this schedule for tomorrow, because again, tomorrow is FOMC Wednesday, and actually there's quite a bit on our radar tomorrow. First things first, tomorrow is the end of the month. Anytime we have the end of the month into a new month, so tomorrow and Thursday, we do expect it to be an uptick in volatility. So please risk adjust accordingly. Keep your position size a bit smaller as we go into the end of the month volatility. The second item on my list for tomorrow, 8:30 Eastern time, I've got the Treasury announcement. More importantly, though, the ECI number, Employment Cost Index. That's a big inflation number tomorrow at 8:30 Eastern time. Don't let that Green Star news event fool you tomorrow at 8:30 Eastern time. Later on in the morning, Chicago PMIs. We saw really bad PMIs a few weeks ago. This is on my radar for tomorrow as well at 9:45 Eastern time. And of course, we need something more to worry about tomorrow. Why not? Let's just toss the FOMC on top of that. You guys probably know this already, but the FOMC, of course, is at 2 o'clock Eastern time. Now remember, anytime we have FOMC at 2 o'clock, it's almost like a Friday, right? Because we want to get in early before things get thin into lunch. So there is a bit of a pressure on us tomorrow to find trades as early as we can. And then, of course, batten down the hatches, right? Buckle up, put the helmet on, and grab the popcorn and watch the FOMC announcement fireworks at 2 o'clock Eastern time. I don't think anybody's expecting them to cut rates tomorrow, but whenever the FOMC speaks, we're definitely going to be listening tomorrow. And of course, don't forget tomorrow night too, we have the second of three really big earnings reports. We heard from AMD and Microsoft this evening. Tomorrow night, we get Meta and ARM, of course, big tech companies, big semiconductor companies, and they get Amazon and Apple, the big behemoth on Thursday night. So the hits will keep on coming this week. So earnings tomorrow night, FOMC tomorrow afternoon, Chicago PMI, ECI, end of the month. My goodness, right? If we can cram one more thing into that trading day tomorrow. Anyways, that's the schedule. Those are the items on my list tomorrow. And again, you want to be, in early. The earlier the better tomorrow morning in our trade. Now back to our charts though, because we know the money is made trading off charts, right? Not trading based on news here. Let's now cover those favorite trades here for tomorrow, because I think once you see this all come together, I think you'll find the game plan for tomorrow is pretty darn straightforward. Again, overall bear market right now on the 60. That will give us our kind of directional focus, if you will, right now. Now, much more important clue here on the tick charts. This is a 7,000 tick chart. All the time frames tonight, upper left-hand corner. I always use tick charts because I think tick charts just make everything easier, especially pattern recognition easier. Trading's a very visual game, right? And these tick charts make the visuals a whole lot easier. There is a bear market right now into a trading range in front of us. Ranges are very, very simple to trade because we know they like to rotate back and forth using things like expanding triangles, like I've marked up here, using things like pendulum swings, I have marked up here. We talk a lot about this, of course, in our free video classes, right? So ranges are magnets. They like to rotate back and forth as we go. And so, of course, the goal on this now is to sell bull traps off the high, maybe buy some bear traps off the low. Got to be careful because we're so bearish right now. We'll talk about that in more detail as we go. And of course, because of the bearish overall market, bear range here, if this thing keeps on sinking lower, one of our favorite trades for tomorrow would be a breakout pullback, right? A breakout pullback off kind of the underbelly of that trading range. So this is all, I think, relatively easy to understand, but let's talk about the actual entry tactics, right? The game plan on this, I think, is relatively easy to understand. Let's talk about some entry tactics I'm looking for tomorrow with students in our trade room. So again, we should be, unless this thing collapses here overnight off those Microsoft earnings, we should try to rotate back higher here and take out some of these highs up here. On the way back to that high, you always want to look for traps as the price rotates back and forth. Now, traps are very, very simple. There's actually one right there we saw this afternoon. Strong run up, shallow pullback, higher high in price. See how the buyers come in and they get in right below that low? That is a classic technical bear trap. It's a higher high in price and a trap right below that low. Higher high in price, trap right below that low, right? So think about that trap pattern. We call these bear traps in our free video classes. Think about trap patterns as we rotate back to the high. So we go up, we separate away from that moving average, higher high in price, and again, simple pattern, right? Trap pattern going to the high. Then we do is, we know we're overall bearish. So up above these highs here right now, we expect there to be two things. One, lots of rookies chasing this thing higher. And two, a lot of sellers trying to gobble this thing up and run this thing back down again. Look what happened over here this afternoon, right? As we pull back now to the moving average, now we look for, now remember, I'm not going to pick a top on this, right? I'm not going to blindly sell this. I wish I was that good. I'm not that good. I don't know many folks who are that good that can pick tops and bottoms consistently over a long period of time. I would rather, at these highs here, I would rather wait for the buyers to come in because, again, we're an overall bear market, up into resistance, above a trading range, right? I would rather trap the buyers in once, twice. Think about now where their stops are going to be. Remember, if you're trapped in as a buyer and you get stopped out, you're a short seller. You're selling your way out of that long position, and that accelerates the move going back down again. That's called a failure pattern in our free video classes, right? We go up, buyers once, buyers twice, and we collapse back down again. Very simple pattern. Now, remember, we use traps as it rotates. So as the market rotates lower, remember, where's it want to go? It wants to rotate back, right, back down again. As it rotates back down again, what's the right pattern? It's always going to be a trap pattern. Again, this will be a trap, but in this case, a bull trap. Now, the trick to these is, again, you want to see a strong shot down, a shallow pullback, like back over here, where they don't actually pull back to the moving average. That's the giveaway, right? Separation. Separation equals strength. So shallow pullback separates off the moving average, lower low in price, and then this is almost always a pretty easy winner as it rotates back down again, right? So as we're going up, it's a higher high in price in a bear trap. As we're going off the high, it's a two-try failure. And again, it'll be in this case, a bull trap pattern as it rolls lower, that lower low in price, and again, that trap signal off of that high. Now, I will talk about here later on in the video, we'll talk about buying off that low, and we'll talk about going lower here, right? Because that's a definite viable option for tomorrow as well. We'll cover that in a second. Before we do that though, remember, in an overall bear market, we oftentimes will get up, we'll oftentimes get that 1, 2 back down again. But because that rotation is so strong, sometimes we take our 1-to-1. It's a winning trade. We run right back up to retest the high. This is not a bullish reversal until it holds that pullback and jams, right? It has to really push through that high to be a full bullish reversal, right? So in most cases, these are simply another bite at the apple. I do not want to buy up here because again, we're an overall bear market, that range below us. So same thing, right? Buyers once, buyers twice. Again, why twice? Because I want to use those stops to fuel that move back down again. These double top reversals in a bear market overall can be one of the most lucrative trades you get each week. It begins with a failure pattern like this. And again, as it rolls lower, think about that separation, equal strength, shallow pullback, lower low, and that trap right there above that high, right? Again, these are double tops. Remember, it has to really rip and break through to even be close to a bullish reversal because of the big trend on the 6-minute time frame. All right, now let's slow down for a second because I know that most of you guys watching right now, you know these patterns. You're making money with range rotations and failures and traps everywhere. I love the feedback I get from you guys. But if you're watching right now for the first time, this might be way over your head, a brand new strategy. I do look at things a bit differently here on this YouTube video, but don't you worry. I teach the entire strategy. I have hundreds of examples of failures and traps and a whole lot more. I cover everything in a lot more detail in our free video classes. I'll put a link up top here for you. Upper right-hand corner, grab that link that popped up there and take that free trading course because I'll tell you the strategy I teach in that short video series will teach you a stupidly simple trick we use every morning in our members trade room that tells us where the winning trades are going to be that day. Then, most importantly, I want to help you time better entries, start making money on your own. I'll teach you 4 my favorite entry patterns, failures, traps, of course, and a whole lot more. I teach the entire roadmap. Hit the link up top there. Take that free course. If you're not making consistent money right now, if you're struggling to qualify for a funded account at Apex or Top Step, that free course is perfect for anyone who is serious about making money in these what have been incredible markets the last few months. So grab a link up top there and learn the entire strategy. Also be aware too, I'm going to put all the important links tonight in the description of the YouTube video. The free class links will be down there. We trade together every day, 8 o'clock Eastern time in our trade room. I'll put trade room information down there for you as well. And also too, I post a lot of videos and charts and mindset stuff on Twitter or X. If you're on X or Twitter, hit me up, give me a follow. Again, all the important links, the details, description of that YouTube video. Start first though with that free video course. One last variation, right? One last variation. And then we'll talk about the move going lower, right? Because we might get some bear traps down here or some breakout pullbacks. If we run higher here, sometimes what happens is we don't get that 1-2 and trap the buyers in. I would love to get up, right? I would love to get up, trap the buyers in, right? And roll that sucker back over again like we did right this morning. The problem though is you know what? In a bear market like this, we may get up and we might get crushed right back down again. These can be tricky, right? Because you don't want to chase after it. So if we get something like that, if we get a V top off that, if it runs up and gets whacked back down, watch for when it begins to grind down. The grinding motion is the giveaway. The hardest part about these is that voice in your head is going to tell you, come on, dummy, get in. You're missing it, right? If you're anything like I am, that voice is like taunting you, right? Get in, come on, you're missing that rotation back down again. Promise me, do not chase after moves like this. Watch closely, draw trend lines off that low, pin that trend line up around the highs. We call these hidden channels in our trade room. Most important thing, look left, find some prior swings. And what you want is you want to get in off the first test of that channel, right? See that first test, right? It's a new channel. That's the first test is the best test, as we always say. And my favorite trade on these are bull traps above prior highs. Oftentimes these things will get below the moving average for a failure or a pullback combo. Again, you know the market wants to rotate back down again. The key here is if we don't get that signal up top, if we don't get that good up 1-2 and sell back down again, if it grinds down, don't chase it. Find that new channel, first test, bull trap, buyer failure, pullback combo. And again, this will all make a lot more sense to you once you get through that video course I mentioned earlier. All right, guys, a little more variations there. And again, if it runs up, right? If it runs up and we start pulling back and really jumping, right? If we can really lift off, right, off that high, okay, now we are a bull market, and we'll cross that bridge tomorrow, the trade room, once we get there. Now let's talk about the market going lower here, right? Because as much as we're bearish right now, we are sitting at some major areas of support. Can I buy it up here, right? With a bear trap? And then how do you know how to short this thing as it goes lower? Those are great questions. Let's answer those questions now on the Nasdaq. Nasdaq and the S&P are pretty similar overall. Nasdaq, 60-minute time frame. You don't need me to tell you this right now, right? We're pretty bearish here overall in the 60-minute time frame. But again, we're not going to trade off a 60-minute time frame in our trade room. We'll go over our tick charts, a 4,000 tick chart, upper left-hand corner there. Now, let's think about this on the NQ. Not as obvious as the S&P. The Nasdaq's always a bit wilder, right, than the S&P is. But basically same idea. Bear market down into a trading range. Again, I've got this triangle right there. The pendulums right there as well. And again, we expect this to want to rotate, right? Rotate back and forth. I gave you guys a number of ways to short that thing off the top. We talked about how if we go higher, let me clean off this measured move, keep it simple there for us. I talked about how as we go higher, again, same idea, right? Shallow pullback, get below those lows. You trade these bear traps on the way up. Pretty good trade there. Didn't look as good on this bigger time frame, on a faster time frame. Nice, easy winner. So same idea, right? We get that higher high in price, that trap below that low, right? As it rotates back up, we get up 1, 2, back down again. Don't be afraid of that double top, right? Doing it again. And again, if it V tops off the high, right? V tops and grinds down, find that channel and get that first test off the high. So I'm not going to go over the whole entire thing in more detail again, because the S&P is pretty much the same game plan for it. As we go lower, right? As we go lower here, with that range above me, I can try to be a buyer down here, but because we are so bearish, I have to be a lot more patient on the entry. I can be pretty aggressive. We run up, I can be pretty aggressive selling into buyer failures off the high here. If we run lower though, the bears are they're not gonna give up without a fight, right? They're not gonna give up without throwing some serious bullets at this. So to do this, I'm looking for a crown reversal, right? Crown reversal patterns are basically a bear trap pattern and a reversal pattern put in together. Crown reversals, bears try once, bears try twice. If you put together, in the free video course, if you put together a bear trap along with a failure pattern, you get a crown reversal, right? If bear traps and failures had a baby, right, it'd be a crown reversal. So the bear trap is, it has to get below that prior swing, right? It's a higher high in price, a trap below low. Just like as we go higher, right, a bear trap is a higher high in price, a trap below that low. This is the same basic pattern, right? It's just going lower first, pops up, bears once, higher high, bears twice, just like that, right? That is a crown reversal. I call them crown reversals. That way people know it's a reversal, not a continuation pattern like a regular bear trap would be, all right? Remember, very important, higher high in price. Why higher highs? Because we need the sellers to get roped in. I need bears once, I need bears twice, I need their stops. I need those stops to get fueled. And again, I don't want to buy too high. I want to buy as low as I can because, again, we are an overall bear market. I want to be well in the green on that trade once it starts moving higher, just in case there are more bears coming in and they whack that thing back down again. I want to be in the money in that trade pretty far by the time I get up there. Right? Makes sense? Okay, that is a crown reversal to buy off the low. Also too, right? Let's say we run up all the way back down again. If we V bottom off that low and begin to grind and grind and grind, remember, ranges want to rotate, right? They want to rotate back and forth. So if it grinds up, it'll want to take out that rotation high up there. All you do is you look left or you draw a trend line, right? Off those highs, bring it down off that low. Same idea, look left, find some prior swings, right? And look for that trap below that low. These come in lots of shapes and sizes, right? Back over here, off that high, right? Off that low, get underneath that swing, right? Pops up, grinds up, trap, and go from there, right? Same basic idea here. So if we run down, I have this measured move marked up below me here. Anytime we see a big news breakout, we use the size of that news spike becomes a measuring spike. That's where that comes from, right? The size of the news spike is always a measuring spike. So if we run lower here, and again, crown reversal is a bear trap off of that low. A lot of examples of those in that free video course. Again, if you've done so already, grab the link that popped up there, upper right-hand corner, or that V bottom off that low. Now remember, the key to a V bottom or a V top is it will begin to separate off the moving average. That separation is almost always the giveaway, right? Because that tells you now the upside of the market right now is getting out, right? They're getting out as this thing rolls higher. Mark that high, mark that low. And again, my favorite trade is the first test, but I love it whenever we can get a prior swing low that lines up with that channel, right? First test, the best test. Mwah, that's a gorgeous, gorgeous reversal off of that low, and you know where the market wants to go. So leave, right? So leave that runner. Now, let's talk about if this thing just bloodbaths, because again, we got some big news came out tonight. We got more big news tomorrow morning. If this thing winds up really ripping lower here, how do we then trade basically a breakout pullback? Well, first of all, if it rips lower here, now pretty much all of this area now becomes a key area of resistance. If we wind up running lower, remember that saying, separation equals strength. Separation equals strength. If we blow right through those measured move levels that before, and we start separating off that moving average, getting that lower low in price, separation equals strength, and we look for those, in this case, a bull trap pattern, right? It's a lower low in price, trap below that low, okay? These patterns, by the way, I always go half size on these ones because you're selling relatively low, right? But again, if you have enough strength going lower here, getting that separation off that 21 EMA, you know this will probably make one more leg going lower here. Now, very important, breakout leg, measuring leg. Okay, trends love to make measured moves. The breakout leg of a range is almost always a measuring leg. The breakout leg, measuring leg. That will tell you where to put that final target. Now, once we complete that measured move, that breakout leg, measuring leg, now we think about a breakout pullback. Now, breakout pullbacks are very, very simple. When I think breakout pullback, there's two things you want to think about. One is a two-legged pullback. And the second thing is the underbelly, as I call it, of that trading range, right? So first of all, I think the underbelly makes good sense, right? It's kind of the levels that were support become resistance on the edge of the range. Very, 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 very consistent about how range breakouts work. Now, the two-legged pullback. A two-legged pullback, in the free video course, we talk about measured moves, right? So one leg and two leg. When I think of a two-legged pullback, I think about a bit more than a measured move, right? Go 120, 130, you know what I mean? Get more, right, than a measured move. That will mean we're overextended now to the upside. Okay, now, this is where the magic happens. We're not going to pick a top on this, right? I'm not going to blindly sell into it. I don't have a crystal ball. It may keep on going, right? And we'll talk about that here in a moment, in a second here. However, what I do know, though, is we're a bear market overall. We're at the underbelly of that trading range. I do know this is the last place you want to be buying right now. You don't want to chase it going higher. So if I see buyers come in, rookie buyers once, rookie buyers twice, get that failure pattern, right? The two-try failure. The target now is easy. Back down to retest that low. This is exactly where that failure into that, remember it again, separation equals strength. We separate off the moving average, same pattern we saw right there, do it again right there. Right? Do it again right there. This, by the way, now is a much more reliable pattern now because we now have the evidence of that move going lower. Now we get that lower low in price. Again, separation equals strength. And again, a bull trap pattern as we go lower. This oftentimes, by the way, becomes one big trading range down here. This is where a crown reversal would come in. I'm on a space here right now. A crown reversal, higher high, trap low. That pattern right there Okay, right at that double bottom, right, and back up from there, right? So some patterns I'm watching there for tomorrow. Now, sometimes, right, and again, this is kind of the simplest roadmap with that bull trap pattern on the way down, that two-legged pullback on the way up. Don't chase after it. Again, it's a buyer failure pattern in the free video course. It's a bull trap pattern and back down to retest the low. How would you know if we made a strong run lower and then we're going to see a two-legged pullback going higher here? At what point going higher would you think, you know what, I might not want to sell this anymore? What do you think? The giveaway is the grinder, right? The giveaway is the grind. If it pops up and begins to grind, right, away from that moving average, remember, grinding is a huge giveaway. Not so much grinding, the grinding and separation away from the moving average. Right? Because, like for example, a bear flag, right? A bear flag is like this. A bear flag will do this, right? That's a bear flag. Bear flags are right on top of the moving average, right? That's a classic bear flag. That will likely go back and take out that low again, right? But again, if we get, and hope this isn't too much detail for you here, if we pop up here and we start grinding away from the moving average, right? This is why the 21 moving average, I believe, is the only tool you really need. If it grinds away from that moving average, right, separates above that 21, that is no longer a bear flag. And in these situations, again, off the high, off the low, what I do in these situations is I'll look for a two-legged pullback, right, like that, right? A two-legged pullback, two-legged pullback in that area, bear trap, failure pattern, crown reversal pattern, right, off that low. But again, remember, this is after we see evidence that we are flying high now, separating off that moving average, right, guys? So that is how you trade the breakout pullback, and how you know if that pullback is maybe not time to sell that, maybe better to buy that kind of pop and grind move off of that low. And if we do, right, that range above us, that's the magnet, right? That's the magnet. So leave those runners. All right, guys, I'm getting excited just kind of thinking about this right now. So FOMC for tomorrow, my goodness, we have so much to talk about tomorrow night, but tomorrow though, that's the plan for tomorrow. Now don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with me, guys. The easiest way to start making money in these markets is to learn and trade along every morning, 8 o'clock Eastern time in our trade room. Again, I'll put all the important links tonight in the description of this YouTube video. Start first on the free video course. For most folks, get their roadmap underneath their belt, learn the fundamentals, start making money on your own. And as always, any questions, any feedback, hit me up in the comment section or call the office. I'm always here listening, answering questions. All right, guys. Hope you learned a bunch here tonight. Hope you use this knowledge to make a killing tomorrow on FOMC Wednesday. And of course, hopefully I'll see you sometime soon trading with us in the morning room, 8 o'clock Eastern time. In the meantime, be well, be nice to each other out there, will ya? And be here next time. Adios, amigos. Bye for now.